Hello, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Aisha Faridi. And for now, we are looking at fresh record highs for the market. And the good news is that we're holding above the mark of 24,400 at the index level. There's green on the screen, whether you're looking at the banking index, the mid-cap and the small-cap indices, though there's a bit of an outperformance when it comes to the broader markets. And that, of course, is something that is worth talking. Separately, in terms of the sectoral performance, it's of course autos which is leading the charge, and what's really doing quite well is Maruti, which has seen the biggest single day gain that we have seen since January of 2022 or June if you're looking at an intraday basis, but that stock is higher by almost 7 to 8%. Not just that, you also have M&M which is doing quite well from the index, so that stock too is in focus. Maruti is of course reacting to the news flow on your screen, which talks about how UP has decided to free the registration cost on strong hybrid, and we just spoke with R.C. Bhargava, the chairman of Maruti, and he talked about how this will have a small impact with respect to the uptick in sales in UP, but the bigger push is the change in the policy direction, and he's hopeful that this is just the beginning and other states too will follow suit. So that's the big statement that we've got from R.C. Bhargava, and that of course is the reason why the stock is up solid 7%. But as I was talking about the other auto names, the likes of M&M, Apollo Tyre, Bosch, MRF, these are the stocks which are doing very well, and that is followed by the PSU banking names, so a Union Bank, a PSB and IOB. These are some of your other gainers. On the losing side, after that big run-up yesterday, ONGC is cooling off a bit and Reliance too is on the back foot. But other than that, from the broader markets, it's a couple of pharma names, so Jubilant and Grevia, or some of those chemical manufacturer, Gland Pharma for instance. Some of these names are perking up, but overall, it's a good day, Aisha, whether you're looking at the broader market, the frontline index, and then, of course, the auto sector.
Oh, yeah, absolutely. And you can't take your eyes off from Maruti today, can you? I mean, the fact that it's single-handedly holding the Nifty up, it is the top move on the index right now. Near about 800-point move is what the stock is sitting on as we speak right now. And this after the UP government announcing that waiver of registration fee on strong hybrid vehicles. In fact, Anisha was just alluding to the fact that R.C. Bhargav just spoke with us shortly. Let's hear out what he had to say about it.
The target of achieving zero emission, carbon emission, and reducing the dependence on imported oil cannot be achieved only by electric cars. This will have a short-term impact in increasing sales. I'm not sure by how much, but impact on other states. What will happen to policy? Because once policy starts recognizing that you have to encourage alternative technologies and not only one technology, then that has a much bigger impact on the future development of vehicles and the extension of cleaner technologies. We continue to interact with government, and besides CNG and hybrids, we are also pushing very strongly for biogas and ethanol. We think those are fuels which are been produced from our own natural resources within India. They have no import content. They are going to create a much greater impact on emission and the atmosphere than any other source of energy, and those also need to be encouraged. I'm hoping that now, with good rains coming and weather changing, that sales will pick up. At the same time, I think at least some companies will adjust their production so that the inventory levels with the dealers come down.
Okay, so that's about Maruti, the biggest gainer in town right now, but there are other stocks which are buzzing around as well. In terms of other stocks and news, we are putting the spotlight on some of the brokerage action as well. PI Industries is in focus as UBS says that they prefer PI Industry within the entire chemicals basket. Their price target is closer to 4,800 rupees a piece. Dr. Lal is another candidate, whereas UBS has hiked their target price to 3,500 versus 2,900, and Emami is the one in focus with Citi increasing the target price all the way to 900 versus 650 bucks. CSE is the other big buzzer in the trading session today. The tariff has been up somewhere between 5 to 6% in the Kolkata region, and that means that the regulatory assets come off a bit by maybe 150 to 200 crores, and that is positive. That's the reason that stock is up 5%. But let me take it across and welcome our technical experts on the show. As always, Kunal Bothra as well as Naresh Mirani joining us on the show right now. Kunal, Naresh, hi, good to be speaking with you. Kunal, let's begin by discussing the market texture right now, all-time high levels on the Nifty. But what next for, let's say, Bank Nifty as well as Nifty? What are the levels to watch?
Yeah, I think it's been a good day for the indices. We are up almost 100 points on the Nifty, 100 odd points on the Bank Nifty. And I think the good part about it, of the market so far today is the sector churn, because yet again, I think we've seen the sectors rotating quite smartly today. For example, we've seen the erstwhile underperforming sectors, the autos and the PSU banking index. They've made a very strong comeback. In terms of levels for Bank Nifty now, I would believe the fact that we've broken past about the 50 to 500 mark today. If we sustain about this level and assuming, if we close above, this level of 50 to 500 on the Bank Nifty, we could be looking at now 53,200 as the next target for the banking index over the very short term.
Right, okay. Kunal, any individual stocks that you're identifying right now? I mean, it clearly seems to be autos today, right? Maruti, M&M, Eicher, all of them, even Hero MotoCorp.
Well, yeah, I think, and from the auto pack, even Tata Motors is something which has started to look very attractive. And that's a chart which is now coming back into a uptrending mode, breaking past about the 1,010 barrier, which was a mild resistance of sorts for Tata Motors. M&M has also made a very strong comeback. The stock, coming back into almost after 3 weeks of consolidation, breaking past above, 2,900 plus mark. So both of these charts are actually looking very attractive from a short-term play.
Okay. Naresh, hi, afternoon. How is it that you're mapping the market trend? And other than autos, any bullish trend that you've identified?
So one trend is the way FMCG names have started making a breakout. So we've seen ITC today make a breakout, but it is also the other names slowly and steadily coming up. So whether it's a Dabur or whether it's a United Spirits or even say a Britannia. So the structure is positive. We are seeing this rotations play out. So today, in the 100-point Nifty, you have 20 points coming from ITC itself. So overall, we are continuing rotation. The bias is positive, but FMCG could be one more spot which now becomes a buy on dips.
That's a view coming in as far as the entire market setup is concerned. But some of the pharma names, as we were discussing, are also perking up, Kunal. So Jubilant Ingrevia, Glenmark Pharma, you also had AstraZeneca doing quite well. What within pharma would you look at buying right now?
Jubilant Ingrevia is something which I've been very bullish on, and the stock today showed a classical breakout. So, when you look at this over the last 3 to 4 weeks, it was forming an inverted head and shoulder pattern formation. So, I think, over the last, 2, 3 months, the stock was going through a lot of choppiness. There were false starts to the stock price, but then it didn't result into the stock really starting and kickstarting a very strong uptrend. Today seems to be a breakout day where the stock has ended this phase of choppy consolidation. So looks very interesting on a short-term basis. And my sense is that this may not be a one-pointer move for Jubilant Ingrevia. You may see more legs on the upside for the stock over the near term. So my expectation is after this 8 to 9% plus up move for the stock today, the stock over the next 2 to 3 weeks should ideally rally by another at least 8 to 10% further from current levels.
Right, okay, those are some of the buzzing stocks. While you can't really move beyond autos today, there is a PI Industries too, which is holding up a good 3%. In fact, sporadically, you are seeing some of these chemical and fert names do prop up in today's trading session. And PI Industries clearly is one such case in point. There's Alchem holding out well, Ipca Labs is looking good. Lupin also continues to hold out, another 2% of a bump up coming in on this stock as well. And Abbott too is holding up more than 1.5% as we speak right now. Naresh, anything that you are identifying within pharma, because the moves here are continuing from last week?
Yeah, so there are some breakouts, something like Lupin, which has given a good breakout. Any dips back to 1740 to 1720 would be a buy. On a fresh buy list, there would be Sun Pharma, which has now sustained about a 2-month high and looks promising to set up for a new all-time high. Same way, there is a small cap, Laurus Labs and Natco Pharma, etc., which are looking well. Laurus Labs has made a 1-year high and has seen good volumes in the last 3-4 sessions. So Laurus Labs and Sun Pharma look like a buy at current levels right now in the pharma pack.
The view coming in on the pharma pack right now, but what's actually losing steam is a lot of these public sector entities and spots which are doing quite well. So they are clearly seeing some profit booking, whether it's a Keynes Technology, a BML, a Railtel, a Rights, even Raymond for that matter, which was doing very well. And of course, 11 July is the date when it goes X of its demerged entities of real estate, etc. But some of these stocks are losing out today. In fact, Raymond is a stock we discussed at length with Puranju as well. Hear out what he had to say, because it seemed like while he's booked partial profits, he's still quite bullish on the fundamentals of this one.
This is a part of the theme which I used to talk in the last 5-6 years, where the significant makeover of companies, especially with regard to the management, the promoter attitude towards minority shareholders has been evolving. We stay invested, even though we have booked partially for some of the clients, whose portfolio, Raymond became 30% and more because of the growth in the stock price. So otherwise, I feel comfortable holding on to the company. Most importantly, what we see today is, the promoters, the management of Raymond is doing full value unlocking. I have seen even highly ethical companies, they make it a holding company and enjoy all the wealth, and there will be huge discount for the wealth of the company in a listed company. So in the case of Raymond, they are fully opening up and fully sharing that wealth with all the shareholders.
Okay, so that's the view coming in as far as Raymond is concerned, and what Puranju has to say on the same. In the meantime, we're also watching out for what's happening with the likes of KRBL. That stock is up 7%. Of course, there was that news flow. The government is mulling easing the export curbs which are there, and we spoke with the management of Chaman Lal Sethia earlier, and he did allude to the fact that there is a possibility that the government should consider some sort of relaxation when it comes to the export of some of these products. So that's something which is also keeping that stock afloat. In fact, let's quickly listen into what the management had to say before we take the discussion forward.
Hopefully industry, which is a volume of 1 lakh crores, basmati and non-basmati, and non-basmati will get a definite relief. Farmer in India will get a better price. This is a welcome decision. India, with two very important crops of 1509 and Pusa, their prices are on a lower side, and they cannot be exported now above 800 USD. Lot of carry forward of these two varieties is with the industry, and I think government should look into this part.
Okay, in the meantime, the focus keeps drawing back to some of these defense and railways names. While, of course, last week you had the shipbuilding names hold out. Yesterday as well, you saw a fair amount of rally on those names. Today, they're, of course, petering down. But look at the railway names, for instance. Ashwini Vaishnaw, the minister, has announced a significant boost now to the country's rail network. And once again, you are seeing renewed vigor across the railway names as well. And they continue to hold out. Kunal, any of the railway names that you are, still willing to buy afresh or hold on to?
Well, yeah, I think from the high beta pocket and the non-FNO stocks, there are a couple of them which are looking attractive. Even though these stocks have run up, of course, exceedingly high, so maybe a buy on dips could be a better strategy into these pockets. One of them is RVNL. The stock has shown exceptional jump in the volumes and the price patterns over the last 1 month, as well as over the last, of course, 1.5 to 2 years. That stock has done pretty well for itself. Now I think the stock is trading close to 550, 555 odd range. I would believe that after yesterday's price uptick, and in fact the last 3-4 days of price up move, you might see the stocks shifting up their ranges. So what has happened is, in this move where these railway stocks have moved up higher, the range which was earlier at 20% lower for these stocks, have now moved up higher. So for RVNL, I would probably believe that we could now be looking at 500, 485 as a fresh base, and closer to 615 to 650 as a resistance on the upside. So we are looking at a base shift from 350 earlier to now 500 broadly as a pivot support for RVNL. IRFC is something which is looking attractive. That's a chart which has done exceptionally well from being a point where the stock was almost at 30, 35, 40 rupees a couple of years back, towards the point when the stock has come closer to the 200 levels. Looks quite strong, the momentum being in its favor. So I believe even this candidate could be a good buy on dips. The only concern with the railway names is the likes of IRCTC, because there have been not many false starts for IRCTC. It's not typically the same high beta stock which it used to be a couple of years back. And I think that's one of the major reasons why this stock is not being able to pick up as well as get into a breakout mode as compared to many of its other non-FO peers.
Point taken. So that's the view coming in on some of the railway stocks. Just wanted to highlight the flashes at the bottom of the screen. Seems like there's a price hike which has been taken by some of these battery companies. So Excite as well as Amara Raja are reacting to that. There's a bit of an uptick in the last few minutes, and that's because this price hike will start reflecting, of course, from Q2 onwards, and would mean a bigger fillip coming in for the revenue. And as it is, a couple of these stocks have been in lots of favorites of the investors of late. So watching out for these names. Time for a quick break. Don't go anywhere. When we come back, we'll discuss what's happening in the market with Ajay Vora.
Back with closing trades right here on ET now. While autos, of course, are the ones which are powering ahead, but the Nifty is also. We're holding up a good 117 points up in the green, nudging that 24,500 print. On that note, let me welcome on board Ajay Vora, Head Equities, Nuvama Asset Management, joining in on the show right now. Ajay, hi, good afternoon. Good to have you on the show. Ajay, help us understand, how is it that you're dissecting the market construct? Because the kind of move that one has seen since the election results has been really parabolic, and now you have another event, the budget, in just about 2 weeks.
Yeah, hi, good afternoon, and thanks for having me on the show. So broadly, we have been constructive on the markets all throughout last year. Although, there were some hiccups in between, but I think till the time the earnings growth profile is pretty strong, I think that there is very less downside to the markets, and that is why, from the election outcome day also, we have seen a very sharp rally from the lows. Because honestly, a 15-16% compounding kind of a earnings growth is pretty much visible right now. And you may have certain sectors which can outperform and some sectors which will be a laggard, and that is what our job is, right? To identify sectors which can outperform and eventually generate alpha out of that. So I think that couple of sectors which have been laggard, like IT or pharma, are looking pretty good from here on. I think the growth can surprise what the market is expecting, and basis that, I think that on an absolute basis you can get a decent upside in these two sectors from here on.
Okay, so that's interesting. But what's also been intriguing, Ajay, is the fact that over the last 1 to 2 years, there has been quite divergent moves within, let's say, public sector entities and public sector and the private sector entities. While public sector entities have definitely outperformed by a huge margin, do you see this trend continuing, or there could be a reversal on the cards?
So I think that if you look at the numbers, for the public sector banks, the CAGR over last 3 years, right, from FY21 till FY24, at an aggregate level, has been almost 2x that of the private sector banks, and that is why if you look at the whole performance of the public sector banks, it is way ahead than the private sector. It's mainly coming on back of the higher CAGR over last 3 years. But I think from here on, the major tailwinds which the public sector banks had is somewhat moderating. And my sense is that, from here on, it will be more or less in line with the private sector banks, or can be a little lower. Because if you look at the valuations for most private sector banks, they are looking very attractive from here on. And therefore, I think large part of the rally for the public sector banks, which was outperforming, may be more or less in line with the private sector banks now.
Okay, so that's a view on the private and the public sector. But what's the view on urban discretionary versus rural recovery? Because again, last 12 to 14 months, the biggest theme was affluent India, and it did really do well in terms of tourism, in terms of those, affluent stocks. But is it time now to perhaps make a bit of a churn and go for the rural recovery plays? Is that a good tactical trade as per you, just around the budget?
So clearly that is the expectation, because you are absolutely right that the rural consumption or even consumption at the lower end has been suffering since a while. And my sense is that historically we have seen this kind of a budget more or less being similar to what the earlier budget was, which was there in February. But I think this time there can be some major push on the consumption side, and therefore rural recovery can be expected, which has been a big laggard. Also, another important thing to note over here is that over last 3 years or so, the government's revenue expenditure growth, meaning revenue expenditure as a percentage of the overall budget, has been coming down significantly. So all the free money which was getting distributed in the rural area has been coming down, which has impacted the overall consumption to some extent. But I think that the money that has been spent on capital expenditure will result in a lot of jobs, and therefore more income, more disposable income in the hands of the consumers. But broadly, I think that in the current budget, in the upcoming budget, we can expect some sort of announcement which will boost the overall consumption.
So Ajay, where is it that you see the profit pool getting created from here onwards? And I ask because we're soon going to be counting down to earnings, but TCS HCLT is slated for this week itself.
No, so I think that sorry, I missed your question, the initial part.
No, I was just wondering, where is it that you actually see profit appreciation coming in, either in this quarter or next 2 to 3?
Yeah, so if you look at the overall profit growth which is expected for FY25, almost 60% of that is coming from banks and metals, right? Because last year, if you look at it, a large part came from autos to a very large extent. But this time, auto as a sector, or even I would say IT as a sector, is going to be pretty muted. On the other hand, you'll see banks and metals contributing in a big way. Whereas, oil and gas, again, which was a major contributor last year, is expected to show a little bit of decline, mainly because of the OMCs. So all in all, I think that 60-65% is coming from banking and metals, which should ideally do well from here on. But as I said, that stock prices move basis beat to the expectation. So I think the expectations are pretty low on the IT side, and if we get some sort of upgrade over there, the IT sector also can contribute to the rally.
Before we let you go, Ajay, any top themes or top bets right now that you're watching out for?
So I think that there are two broad themes which you are playing. One is on the consumption side, this whole both at the domestic level, whereas the exporters to the overseas market of the I would say the household goods. That space looks interesting, and as I said, within domestic also, the consumption should ideally now pick up, because if you look at segments like apparel and the whole vacations, the whole hospitality. So my sense is that demand is still very robust over there. So that is on the consumption side, and the whole infra play we are participating through cement as a sector, because we believe that with the consolidation happening, there will be a decent price discipline, and which will result in higher profitability going forward. So on the capex side, I think cement is a better way to play, and consumption, there are few categories which can surprise on the growth.
And certain consumption categories, these are something to watch out for. Thanks, Ajay, for making time and speaking with us. Appreciate your time. But in the meantime, let's head back to our technical experts and get the sense as to how the market mood is and what the big closing trades are right now. Kunal, what's the CT trade for you?
So, Anisha, that will be on Tata Motors. And as I said earlier, that my sense is that the stock looks attractive and is heading towards a breakout yet again about the 1,000 level. So, closing trade wise, Tata Motors is something which looks attractive for a potential target somewhere in the range of 1,060, 1,080.
And Naresh, what about you? Anything other than Tata Motors on your radar?
So that would be a buy on Britannia. We are seeing good momentum across the FMCG space. The stock after today's gap up is very close to a new all-time high. 57.25 being the previous one. So expecting that to break out going forward. Stop loss at 56.30, target price of 57.25.
FMCG name that hasn't moved as much in the last few days with the rest of the pair, but maybe Naresh is expecting that to happen. The FMCG stock of today, of course, is ITC, because that one is seeing a strong breakout right now. Let's pull up that one, up almost 2.5% on that one. But time now to slip into a very short break. But as we do that, listen into what the comments are from the former Defence Secretary Ajay Kumar, who's gone ahead and floated a venture capital fund to back early age startups in the defence aerospace. Listen in to what he had to tell us.
We are very optimistic, and we are sure that the kind of professionals that are there in the fund, we will be able to make good bets, and typically in time frame of 3 to 5 years would we start seeing, good growth in these companies, after which the exits will take place and the investors would start getting their returns.
All right, Mr. Kumar, can you just tell us a little more about what kind of companies have you identified? Not names, but technologies, companies, specific. Is it more hardware? Is it also including software? A little more details about how you are, as a fund manager now this time around, scanning the ecosystem.
Yeah, so one of the strengths of this fund is that we are in process of identifying certain themes where we would be focusing our attention, because it is very necessary to be able to get into the depth of the area which we pick up. And two areas which have been identified so far, and we are moving forward in some of the other areas. One is, of course, the space as a sector, and the second is on the drone and UAV space. These are two areas which we have already identified. The team is working, scanning through the whole set of sectors, and then trying to zero down on. We will ultimately have 5 to 6 sectors in which we would be focusing as far as this fund is concerned.
Right, but you firmly believe that there's a very long tailwind in this space, because some in the market believe that defense, opportunities have already moved out, already panned out. Can you talk to us a little size and scope of this space, and what kind of tailwind does it provide in the years to come?
So defense and aerospace is a $1 trillion+ market globally. And if you add space to it, we are just seeing the tip of the iceberg as far as space is concerned, this is going to be even further more. Therefore, and we are really, we have not even, we have seen the very smallest part of it. The second part is this market is kind of winner takes all market.
Absolutely. You can catch the rest of the conversation on our special show Startup Central at 6 p.m. today. So do not forget to tune in. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more updates after the break. Welcome back. You're watching Closing Trades on ET Now. I'm Vinny Motiwala and Snehi Shah also joining in with us. And Snehi, today surely an interesting day panning out, right? Again at those record high levels for the Nifty. 24,436 is what the level is right now for the Nifty. Picked up momentum in terms of the pace that we've seen through the day, and now holding on to gains of almost 0.5% in trade. Similarly, when you're looking at in terms of the broader markets, how that is doing today, when you're looking at the mid and small caps, a bit of an underperformance, but that also has remained in that range that we saw. Look at it, was much higher, the broader markets, the mid and the small cap, but then gave up some of those gains, but now managing to hold on to the 3/10 to 4/10% of gain. But a lot of movers in trade today that we have, especially look at a Maruti, look at an ITC, all of them are seeing sharp moves coming in. And Ansh is here to deep dive into those volume action stocks for today. Ansh, tell us what else is on your radar. What are you looking at today?
Yes, so let's start with the stock which is moving Nifty actually, that is Maruti. If you see the chart, then the stock seems to have given a breakout from its downward sloping channel, registering its biggest single session gain in over 2 years, surpassing about 100 EMA along with good volume of 3 times its average trading volume of last 20 session, indicating strong participation in today's breakout. Apart from this, ITC will also be in focus as the stock has given a breakout from its cup and handle chart pattern, hitting 5-month high with good volume. Lastly, Crompton Greaves will be in focus as the stock has given a breakout from its 7th session consolidation pattern. In addition to this, the stock has also touched 2-year high level and it's trading above key DMA level. Also, today's breakout is backed by good volume of almost around 3 times its average trading volume of last 20 session. So apart from this breakout stocks, there are high chances of IEX getting into band list tomorrow. So keep an eye on the stocks.
Right, Ansh, thanks so much for taking us through that. We now have Mahendesh Sabarad, independent market expert, joining us on the show to give us a sense of the moves that we have seen, along with Kunal and Nuresh, of course. Mahendesh, I'm going to come to you. Let's talk about the market move we've seen today. Slight bit of a subduedness in the middle part of the session, but we're back to almost the day's highest trading point for Nifty. Yet another record high also coming in for Nifty. Do you think this exuberance we're seeing in Nifty is sustainable going ahead, given that the budget is just round the corner?
Well, there are multiple reasons why the markets are actually upbeat. It's not just today's session. If you look at the past several months, the upbeat market is trying to gauge into the future, wherein we have the likely monsoon outcome going to be positive. We're going to have inflation coming down, and therefore RBI looking for rate cuts later down in the year, probably post-October. We will have a large surge in money coming into India, foreign money coming into India, primarily through the equity route and now increasingly through the bond route as well. And we have now an interim budget upcoming, which could lay the foundation for further growth momentum to pick up. So the markets have been buoyant for all these reasons, and we also likely going to see a lot of corporate profitability surging ahead, because there has been a general demand recovery post the lull we have seen the last 3-4 years, particularly on the consumer side, both durables as well as fast-moving goods. So that being the case, good corporate profitability does indicate better market outlook ahead. And that's what we are seeing in terms of the market reaching new highs.
Absolutely, Mantesh. You know what interesting is also shaping up is just in terms of when you look at the jewelry retailers. We did have the Q1 updates that came in the last couple of days, and Titan, Kalyan as well as Senco. Now, Senco, Kalyan managed to see good growth, and in the last couple of quarters, Mantesh, what we are seeing is that, you know, Titan is been underperforming in terms of the growth that has one has seen versus a Kalyan and a Senco. Obviously, Senco is a lower base that they have, so higher growth is what they're seeing. But do you think there is a play that could come in where we would see a Kalyan and a Senco actually perform better? What's your word coming in for Titan, Kalyan as well as Senco when you're looking at in terms of the...
So it's quite, Titan is a separate company to be looked at apart from the rest. So you cannot compare a Titan with a Kalyan Jewelers or even with a Senco. Having said that, the general jewelry industry has been growing on the back of better income growth that we are seeing, particularly now, better farm income growth anticipated ahead. Not only that, some of these companies have their own, unique plans. Some of them are expanding even abroad with good store growths that are happening. Titan is not into that league in terms of high growth on the showroom side, but they are trying to expand their offerings beyond jewelry now and trying to de-risk the business. So with these different strategies in play by each of these companies, you cannot equate them together and call that the industry is likely shaping up such that there is a market share gain for somebody and market share loss for somebody else. That quite frankly is not the case. Like I said, the income growths better income growths ahead are likely to fuel growth in jewelry sales, but more importantly, specific strategy growth of each companies would determine the path ahead for each of them.
Right, before we take a look at these jewelry players on the charts, I just quickly want to mark Sensex has also reached a new record high as of now. 80,366 is where the Sensex at, 0.5% higher for the Sensex, and led by gains in Maruti Suzuki, M&M, ITC, Sun Pharma and Titan, all of them aiding Sensex to record fresh levels. But let's focus back and talk about the jewelry players. And Kunal, I'm going to come to you. Give us a sense of what these players are looking like on the charts to you. We got a fundamental take. Give us a technical take on what Titan as well as Senco look like on the charts to you, as well as Kalyan Jewellers.
So I think all three of them are different in terms of the charts. For example, Titan is trading below its long-term averages. The charts are very weak. I think just about last week or so, or the last few days, the stock had seen a sharp sell-off, as well as a continuation sell-off below its 200-day moving average. So it means that the stock would probably get into a further downtrend. And in these kind of scenarios, whenever there is a price rally into the stock, it ideally gets sold into, because the medium to longer term structure for these stocks generally becomes weak. So what we may probably have to look out for is that maybe this rally where the stock is moving up higher, if the dynamics of the rally doesn't change, which means that the volumes don't increase up higher, and it's the same nature of price trend the stock follows, then we could be looking at the stock falling further from current levels also. And Senco, on the other hand, I think is trading much above its long-term moving averages, and it's trading with a very strong as well as a fair degree of positive upside for itself. So I think at 1,000 odd levels, it's come back towards that 50-day moving average, making the risk reward a lot more attractive. Kalyan Jewellers, I think, is apparently one of the strongest name from the entire jewelry related pack. So I think in that sense, the stock is trading with almost a 10% to 15% higher bias or a higher level above its 50-day moving average. It's forming a bullish flag formation. The price volumes have been quite strong. So I would probably believe that Kalyan Jewellers is one of the strongest out of the three names that you mentioned. And on the upside, the stock can probably come back to that 540, 550 mark, which is a very decent high for the stock.
Absolutely, surely keeping an eye out on Kalyan Jewellers over there as well. But what's the dealing room chatter this afternoon? It seems like it's on PNC Infra, but more details on that. Sharad is joining in with us. Sharad?
Well, yes, in focus is PNC Infratech, and the dealer buzz in the street is that there's a buying coming in from domestic institution, and it's expected that a PMS is adding its position. Now, interestingly, the DIs have 26% stake in the company overall, and the key DIs already invested in the company includes the names such as Nippon Mutual Fund as well as Kotak Mutual Fund. Now, street is expecting a couple of important triggers for the stock, especially because the stock is literally debt-free. So you can say that the interesting part would be the monetization of assets coming ahead, and especially the announcements are expected to happen over the next 1 to 2 months. Also, it's expected that there would be more settlement of arbitration cases with NHI, which were actually stopped because of the elections. So now more arbitration awards also might be getting awarded from NHI as well. And because of these both reasons, it could boost up the financials for the company as well.
All right, keep a close eye on PNC Infra on the back of that dealing room chatter that Sharad is picking up for us. Thanks, Sharad, for taking us through that. Nuresh, I'm going to come to you for the technicals, and two stocks that I'm spotting that are doing phenomenally well today are from the commodity side. One is you have McLeod Russell and you also have Bombay Burma. Two stocks we don't talk about quite frequently, but both of these stocks are outperformers in the market today. What sense are you making of both of these stocks on the technicals? Are you penciling in any more upside?
So every year or so, whenever we see tea prices go up, these stocks actually make a 20-30% move and then fizzle off. So today we've seen a 20% move, whether it's a Harrison Malayalam or a Bombay Burma or a McLeod Russell. And we could see some bit of upside tomorrow, and then maybe we could top out. So time to avoid. And if somebody has bought, should be looking to book profits today, as or at least tomorrow in the morning itself. We've seen this floppy moves in this sector multiple times. So would be an avoid as of now.
Would be an avoid coming in on these, tea plays that are there. But, Mantesh, what is interesting today also, we discussed earlier, was in terms of the auto sector, right? Maruti Suzuki today obviously running up away in trade on the back of those news flows coming in from the UP side that, obviously the tax waiver that would come in for there. So Maruti obviously is managing to hold on, but with that, auto and auto anks overall as a play has been working out, whether you look at tires or Bosch or, in the sector. What is the word for auto and auto ancillaries? Anything interesting that you're finding, and what's the view that you have?
So firstly, on the automobile side, you will notice that the sales are decelerating since January. The June month sales for passenger vehicles has been the weakest of the past 6 months in terms of absolute numbers. And the growth rate, YOY growth rate, has also been decelerating. Now we are just into tepid single-digit kind of growth numbers for the passenger vehicle industry. But that's not really the case for two-wheelers. Two-wheelers are doing better. They are growing closer to just above the double-digit mark, somewhere around 11-12%. And we see cyclicity hitting the commercial vehicle side quite badly this time around. So all in all, there's nothing much to look forward to except for the two-wheeler space, like I mentioned, in terms of growth. Now you talked about ancillaries. Now in ancillaries, yes, the replacement demand is something that really helps. A lot of ancillary products, particularly tires, particularly batteries that you talked about. And you will also have other ancillary space, be it bearings, be it some of the wear and tear items related to the axle, etc., doing relatively better. Having said that, the forecast ahead seems that the sales for automobiles may not pick up very fast, and the only buzz that we have, and which is what we saw today, was the incentives being offered for electric or hybrid vehicles, and the possibility of some kind of GST reduction ahead. Now, the GST reduction will have to be a collective decision taken by all states and the center put together, but there's enough pressure building up for the GSTs to be moderated, at least for some parts of the automobile market, if not the entire industry per se. Having said that, the outlook only in the case of these events, which is a reduction in the GST and any further incentive offers from other states, can give a leg up to the automobile companies. Today's move in certain stocks is something which I find is unsustainable. And I must point out there is also another move which is likely to hit some of the automobile companies badly, and even auto ancillaries, is that the government is looking at the royalty norms once again, and I suspect that MNC companies will not be able to extract too much royalties of their local units.
Point taken. Let's keep it going about auto anchs. And Kunal, I'm going to come to you. Now, we've seen quite the run up when you talk about stocks like Amara Raja in the previous month. You have Exide that has done well. Give us a sense of how these stocks are looking on the technicals from the auto anchs pack, the likes of you have Apollo Tires, you have Samil. Take us through what you're spotting on the charts for all of these stocks.
See, I think this is a very interesting pocket, Snehi, because there are many stocks over here which are looking very strong. So for example, the battery names, Exide, Amaraja, we've seen what these stocks have done over the last 6 months, 6 months broadly. These stocks have done exceptionally well. So I think I remember being at a point where Amaraja battery was a stock which was just around the 1,000 mark pre the elections, and it's now moved towards the 1650, 1700 zone. Exide was a stock which was just languishing around the 300 levels. That stock is now moving closer to the 600 mark. It's done exceptionally well. So both the charts are looking fairly attractive, fairly positive, and I would still believe that traders who have long positions into these names should ideally hold on to the stocks. Coming to the other set of names, the likes of Samvardha Motherson, Samil. That's a chart which has looked very attractive. In fact, I had been very bullish on the stock when it had started to cross that 106 to 108 levels. It's now crossed even the 200 plus mark for itself. The stock has done reasonably well over the last 1 year, and it's more of a consistent rise the stock has seen rather than those flashy uptrends which the stock typically tends to see in the previous or the historical attempts of the stock starting a rally for itself. So I think that's also another positive sign. Now from the fresh names, if there are other fresh auto anch stocks which are, I believe, heading towards a breakout. One of them is CIE India. That's a chart which is starting to look very attractive. That stock I think is trading just about at 600 plus levels. It's completed a couple of technical patterns, a bullish pennant formation on the longer term charts, swing breakout on the longer term charts, and I believe on that prospect, the stock could probably fairly do pretty well for itself for the medium to long term.
What's interesting today in the players also, let's pull up PG Electroplast. That's a stock that's been buzzing in trade today. We have seen actually a lot of these news flows, and whether you look at a Dixon Tack, Havells, all of them are buzzing. Now, what came in yesterday as a news flow was that the government has reopened application for the PLI scheme for 90 days. We managed to speak to Vikas Gupta, the MD at PG Electroplast, in terms of what are their plans for the PLI scheme, which is reopening again on the 15th of July, the demand that they have, as well as the traction that one could expect for the company going forward. Listen into that today, because as of now the stock is holding on to the day's highest point.
We plan to invest again in a reopened in a new avatar of PLI also for white goods. And what we see the kind of traction that we are seeing in the AC category business for us, it makes a lot of sense for us to commit more capex and look at the larger sales volume in coming 2-3 years from the AC category. So we need to read the finer details of the policy which has been announced yesterday. So we will be formalizing our strategy, and we will be definitely investing in the new version of white goods PLI as well.
All right, PG Electroplast in focus today. Good moves coming in on that stock. Naresh, what are you spotting for this stock on the technicals? And stock has done pretty well today, 7% higher. If you could also pull up the monthly chart and see what the stock has done over the last month, I'm sure good moves have been coming in, 41% higher over the last 1 month itself. Naresh, further upside, is that something you're seeing for the stock?
So the move has been one way in the last, say, 4 months from the March lows of 1600. The stock is at 4000 now. So out here, the only way one can ride it is to keep a trailing stop loss or book in parts. At current levels, the risk reward is way off. So would not be a fresh buy here. The last swing low is 3600. That becomes a trailing stop loss for the stock. And the momentum is still strong. So we're not seeing any signs of topping out as of now. But the risk reward is not great for a fresh buy.
Right. Kunal, let's just go across and take your BTST trades for today.
So there'll be two buy calls. Beneath the first one, which I would be suggesting, would be a buy ICICI Bank. Now, especially after today's up move, where the stock has shown very good traction for itself. Would look out for targets in the range of 1270. Stop loss could now be trailed higher because ICICI Bank has moved up in the last half an hour, last 1 hour. So stop loss could now be kept at 1225 approximately. And the second would be a buy on Havells. That's a chart which I believe is heading towards a very strong bullish, flag formation breakout about the 1900 levels. Buy with a target of 2000 and stop loss at 1870.
All right, you have ICICI Bank and Havells as Kunal's BTST. Naresh, what about you? What stocks have made it to your BTST trades?
So first would be a buy on Britannia close to a new all-time high. Stop loss at 56.30, target price of 57.50. Second would be a buy on Sun Pharma. Revise the stop loss out here. The momentum has been stronger. It's moved up in the last few days, as well as in the last few minutes. Stop loss at 15.75, target price of 16.20.
Keeping an eye out on the stocks there. Those were Naresh's BTST trades. Mahantesh, I'm going to go back to that point in terms of what we were talking about, the PLI schemes that has come in for these players. So what's your word, whether you look at PG Electro, Havells, Voltas, Blue Star, all of them are buzzing in trade. They have seen that traction and pickup. Do you think these consumer durable sides or even an EMS play is something interesting that you are watching out for?
So firstly, as far as consumer durable is concerned, and particularly all these white goods are concerned, we have been seeing that the last 4-5 years, the level of imports has gradually started weakening, which means that there is a lot of localization that is happening. Aided by the PLI scheme, we will see more production happening overall in India. As an industry per se, the growth has been very tepid. I would put the white goods industry growing in terms of volumes at somewhere around 7-8% per annum kind of growth. But there is premiumization that is happening. There is obviously new products that are also coming up, making the value market actually expand quite a bit, coupled with the fact that the domestic share of white goods domestic production share of white goods is likely to go up relative to the export or the imported kind. We will see the industry back-end players actually benefiting quite a bit, not really the front-end players. The back-end players really benefiting a lot. And if the PLI schemes do promise better incentives ahead, it should be all the more good news for many of these white goods manufacturers. But let's remember one thing, the PLI scheme is attractive so long as the interest rates that we see right now are high. The moment we see interest rates dip by about 2 percentage points further down the line, and I'm not talking about 2 to 3 years down the line, the PLI schemes will no longer appear attractive for many of the players. So it's a game where you'll have to be very efficient in terms of your production installation that is quick to capex, and and therefore quick to exit as well.
The view coming in from Mahantesh on the entire manufacturing EMS space in particular. But Naresh, I want to talk to you about one stock, and we've seen some brokerage notes coming in on this one this morning. I'm talking about Affle India. Now, Citi has initiated a buy rating with a target price of 1,600 rupees. And if you see the stock on the YTD basis, has not done much. So, on the technicals, do you think, would you agree with this note and the target price? Are these levels that you are watching out as well for this stock?
So technically, the stock looks interesting because 1350 was the high back in 2022, as well as the stock topped out in the whole digitization wave in 2021. And finally, after 3 years, the stock is coming back. Till the time it sustains about 1330 levels, there is a possible upside back to 1700. So out here positive, but after the gap up, the only concern is it has not sustained really well. But at current levels, one could be looking at a little bit of a drift down, and that would be the time to buy. So closer to 1400 to 1350 is the buy zone with the stop loss below 1300.
Sure. Okay, keeping an eye out on those targets over there for Affle. Kunal, I want to talk about one of these names that have been buzzing in trade, and we've spoken about these before as well, and that is the railway stocks. And specifically, I want to know in terms of RVNL. While we've seen a run up coming in, for a very long time, today it's a bit of a correction coming in. Do you think now it's time, for this stock maybe start booking out profits or something of a downtick that one could watch out for here?
No, in fact, my belief is that if in case the stock comes closer to its say long-term moving averages, say 50 DMA for itself, which would be a fast stretch from current levels. But even if with adjusted towards time, if the stock corrects say towards the 450 to 485 kind of a zone, then I believe that it could probably tap back into a very strong support territory. Because remember, I think historically, whenever the stock has seen such kind of a price volume up move, we've typically seen the stock moving on from stage to stage, trying to up the base for itself. Initially we were looking at 200, 225 as a base for RVNL. That base got shifted up higher at the start of 2024 to almost 300 levels. And now we are looking at the stock at 540 plus mark, which means we could be looking at a fresh base, say closer to 450 odd levels for RVNL. So the closer we are towards the sub 500 levels, say 450 to 480 range, the better the risk reward is to initiate a fresh buy on the stock.
Let's move on then. Mahantesh, let's shift focus from railway. Let's talk about chemicals now. And, this is a pack that has been seeing some reversal coming in, good action being seen in some of the chemical stocks lately as well. And, with this entire China Plus One theme playing out, what are you penciling in for the chemical sector going ahead, given that we've seen some changes in raw material prices also playing out for this sector? So what's your view when it comes to this particular basket of stocks?
So chemical is a space where it is quite a high dependence on imports, quite a high dependence on landed prices of imports as well, with little domestic production really catering to the overall demand that exists in the country, except certain few chemicals. You name it, fertilizers. We import quite a bit. You take even plastic related PE, polyethylene, polypropylene kind of numbers. We still import quite a bit because our growth rate is very high, and therefore this dependence on the landed prices or overall international prices is actually a factor to be watched. What is interesting going ahead is that with the rupee remaining stable for quite a few months now, or I would say quite a few years now, the outlook on the rupee matters most for the chemical sector. While the local demand in terms of products output growth, etc., is going to remain muted, we're not going to see excessive growth unless we see a large plant coming up or a large capacity somewhere coming up in terms of capex that could really drive the chemical sector space. I would rather be watchful of the sector now. It has had its run in terms of the stock prices in the past. There's nothing much available for people to really look at ahead. Even the pharma-linked chemical spaces are looking weak.
Right, Mahantesh, thanks so much for taking us through that. I'm going to take it across to Winnie to tell us about how the day has panned out on Dalal Street. Winnie, over to you.
Absolutely. Let's start winding down the day. And firstly, thank you so much, Mahantesh, Kunal, as well as Nuresh for joining in with us and starting the winding down of the day. Looking at the Nifty, almost, at the day's highest point is what it will be closing at. 24,420 is where the Nifty will be closing at. Up 0.4%, recovered comfortably from the day's lowest point. Sensex 2 will be closing with gains of almost 0.5%. Did manage to touch those all-time high levels in the last half an hour of trade. Mid and small cap picked up those, didn't pick up much pace as much as the broader benchmark indices did see. But yes, closing with gains of 0.3%, both the small cap as well as the mid cap. Nifty Bank, 0.2% of uptick. Today's mover and the biggest mover, we have Maruti Suzuki, that was the top F&O gainer, closing with gains of 6.5% in trade after we did have that update that came in on the UP. Hybrid free registration waiver coming in. So Maruti Suzuki, the top F&O gainer. Other than that, a lot of these other auto and auto ang companies, so Bosch, Apollo Tyres, M&M, all of them too managing to hold on to very strong gains today and will be closing on a strong footing. The pharma pack today also managed to see and sustain good gains. So whether you look at an Ipca Labs, DV's Lab, Lupin managing to hold on to very strong gains, Aurobindo Pharma, Alchem Labs also among these top movers that came in from the pharma side. FMCG, we did have that moving in trade today. Today, Titan was a different story than what we saw coming in the last couple of trading sessions. Titan will be closing with a gain of more than 1.5%. We have Colgate that's buzzing in trade. ITC among the top gainers and pullers coming in for the Nifty 50. And other than that, we had ICICI Bank as well as L&T, which was pulling the markets. So that's how we'll be wrapping up the markets. But with that, thank you so much for tuning in to Closing Trades on ET Now. It's a goodbye from Sneh, myself, as well as the team who put this show together.
If you like this video, then like, share and subscribe to ET Now.